Yeah,
should
I
be.
asked him to come.
Let me try to see. He's probably involved in something right now.
Sorry, I can't. Yeah, I asked him to go through his speech.
There he is.
This printer was not as fast as I was.
Telling stories about you yesterday. Just Vernon and I was talking.
We all set? Rob? Okay. Good feedback. Come to order. City Council work session, August 27th, from 5 till we get out of here before planning commission. Got 3 items on the agenda today, but first of all, we'll do call of order and roll call. Thank you. Suzanne.
Thank you. Mayor Carr,
Here.
Mayor Pro Tem Labar,
Here,
Councilmember Case,
I'm here.
Councilmember Neo,
Here.
Councilmember Pat,
Here.
Councilmember Zulawaga.
I am.
Thank you.
Thank you very much. First item on our work session is talking about vendor fees. We have some wonderful things put together. Darren sent out, I think it was back in March or something, this policy worksheet, which I have in front of me. And now this one's been updated to 728. I have the old one here in front of me. I think they're hopefully they're similar.
I've got a new one for you.
Oh, wait, I handed them out.
Okay.
Yeah,
I handed them to
Okay.
everybody.
Yeah, you got the new one.
I made my notes on the old copy, so I'll have to figure it out. Basically, just some highlights out of that. Vendor fee is actually a tax credit. So we're talking about a vendor fee tax credit. We've got some key information that's put down here, some background information. I'm going to ask if the city manager wants to make a brief presentation.
Sure.
I'd welcome him to do that. If you don't,
I'll touch on just a couple of the highlighted things that I wanted to touch on with you so that
Thank
you
you.
have it for context and in your deliberations. I do want to say, and Councilmember Paff, maybe I'll actually be able to elaborate a little bit more. It's strange when talking to CML on the tax, on the state level. What's going on?
I don't think we're picking up the mic.
Are you not?
Oh, now we are.
Sorry, I wasn't speaking direct. That the state actually had considered, the Joint Budget Committee actually considered slashing the vendor fee this year. But because it's tied to housing dollars and it's an initiative from the governor, I'm not sure why it just didn't make it to the final cut. But that's just an anecdote for you. The other piece is the city will be moving. We intend to bring this as a decision for the city to move towards the SUT system. It's a state sales and use tax system that it's intended to standardize the sales tax remittance process across the state. And so we're looking to actually implement that in the next few months. Jason and Emily have been a part of those discussions with the state and the implementation of it. But it could complicate changes this year, just because we'd be right in the middle of the transition with that system. And if there was a decision that the remittance could have a complication, not great, but just a point to make to you. I do want to touch on some of the stuff that Jason and I have discussed, and Jason has a worksheet that's tied to this, but I wanted to, the 2006 PricewaterhouseCoopers study, which is tied to a lot of different examinations or different analyses of the vendor fee across the state. That's been used on several occasions by the state legislature and other local governments, showed what the potential averages that they believed would be appropriate for a vendor fee to the extent of what services and or what effort and that a business may use in processing or remitting their sales tax, their retail sales tax. And as you can see in the it's under the key information block in that sheet. And you'll see that it says, local government's 0.19% of sales tax, 0.82 for small retailers, 0.32 for medium retailers. The 0.9 is the average, 0.19 is the average across that. And then 0.13 for large retailers. So the smaller you are, generally the more remittance cost of remitting you incur. But I also want to touch on that this is based on the sales tax compliance cost as a percentage of taxable sales. That's exactly how it's tied directly to how vendor fees are remitted, and that's why it's the most accurate form of it. Jason, you want to add anything to that?
I guess what I would add, just as you're considering and digesting all this information, when you look at, and I admit the model that I created is based off of the first line item, because I think that's what is easier for you to see how this applies to folks. But City of Centennial's tax rate is different than the City of Woodland Park, which is different than the City of Fort Morgan, different than everywhere else. And so just because a business sells the exact same good in all different places, if our sales tax rate is much higher than someone else, the percentage of sales tax calculation could be a little bit misleading, because it would cost that same business the same to remit in all those places, but the sales tax rates are different in all of those places. So as a percentage of total, it might not be as accurate. But again, the way I built the model so that you could see the impact to the businesses, impact to the city, is based off of that first line item. But it's just important that you don't conflate the 13% with the 8.82% and use them interchangeably.
Thank you, Jason. I want to also just talk about the potential fiscal impact, because that's one of my duties to you as a city manager. The city currently earmarks approximately $148,795 per year in the 2% general fund sales tax line item, and $74,400 in the 1% streets capital fund 410 sales tax line based on projected revenues for this year. So that obviously changed. It's 3.3% is how it's calculated. It's an earmark in there, but just for your awareness, that's generally what that earmark looks like. From a historical perspective, I do want to say we did do it back in the day when we did this. The historical perspective is at the top of the sheet under vendor fee policy fact sheet. And that the city actually did an incremental reduction over several years when going to eliminate it. And so I went, I believe, from 3.3 to 1% to 0% over those 3 years. If the vendor fee were reinstituted by a new ordinance at 1%, let's say, I just want to kind of give you an idea of generally what that would entail. It could equate to $24,328. And if it reinstituted the 3.3%, it could equate to, this was actually, I think, at the point in time that we were talking about it. I have actual numbers down at the bottom by fund that give you equates what that might look like based on the funds by the projections at the time. So that gives you an idea of anywhere from 1% to 3.3%, what the fiscal impact would be to the budget from both the 410 fund and the general fund. Let me also say that if the vendor fee, my point about bringing this up is that we don't have a stakeholder here tonight that could be impacted by that, and I would like for just to kind of touch on that. The stakeholder being the school district. We do remit. We do a pass through for their sales tax, and as a result, there would need to be an amount that would be removed from their sales tax as well. The fiscal impact of what that means is that if it were at 3.3%, it would be $80,000 out of their budget. If it were 1%, it would be $24,000 out of their budget, just approximately. Okay, so just want you to know that's the stakeholder that isn't here to talk about that, and they have potential fiscal impacts as well because of the pass through that we have for the 1.09% sales tax. And I won't go into a lot of the other things. There's other fiscal impacts from reducing revenues to the city that you have to consider in the same year that we're talking about addressing debt service. I mean, there's conflicting goals in many ways there, but from a policy consideration, the way that we actually, if city council were to reintroduce it through an ordinance, my major recommendation would be to keep it at the most relevant weight, the taxable sales, and also do it over at least 2 years, maybe 3 in terms of implementation, so that it has the least fiscal impact to the budget and operations and our ability to provide services. I think that is to the extent of I would provide to the city council at this point.
And if I could, because one of the things that's been brought up, one of the many potential elephants in the room, I guess, we charge the school district for handling this on their behalf. I won't call it a vendor fee, but you could conflate the two. And I would point out kind of the difference in that instance is we have no statutory obligation to do that for the school district. That was an arrangement that they approached the city well before my time. Correct me if I have the record wrong in any way. They asked us to do that on their behalf so that they could make their funding obligations work in the way that they wanted and that worked for the community. And so in that instance, we had no obligation to provide anything to them in regards of service or otherwise. But that agreement was reached that the city would recoup some of the costs for doing that on their behalf, which is a little different than the sales tax structure on a statutory level, which is required by state law. It is an obligation for anybody who's doing business that is taxable to remit it. Whether we like that or not, those are the differences, but I wanted to point that out.
Jason, since you brought it up, I'll just provide a little bit of context for it. Going back to a vendor fee as a percentage of let's see, sales tax compliance costs as a percentage of taxable sales. As I said before, the local government average is 0.19% is the average based on the Price Waterhouse Coopers study. I will tell you, if you want to do a comparison, like Jason said, they're not directly comparable. It has been brought up before to me. I will tell you that percentage, the percentage of what we charge as a result of the agreement for us to do the pass-through is exactly, almost nearly exactly aligned to that 0.19%. So it's 0.2%. So, and it was an average of, because it's actually a $375 per month fee that we charge. So just so you know, as a percentage of it, it's currently 0.2%, which is the same as what the Price Waterhouse study would have said for state and local governments averages 0.19%. So
Thank you.
that's all I have.
Sorry. Thank you. I like to boil these things down to layman's terms. And so correct me when I stray, because I'm sure I'll get this wrong. But
Go for it.
basically, we collect money, comes into our coffers, and the vendor fee, which was reduced to 0, which is really a tax rebate credit, something going back in 1996, was eliminated, going back to the originators of the taxable sales. I say all this with question marks. So just to be simplistic about it, am I okay so far?
Not bad.
Okay.
It was
So-
1996. Outside of that, perfect.
Yeah, so 96, they got rid of it according to this sheet here. Going backwards. So we have collected this under the auspice. There's several opinions out there where that money should sit or be allocated or go to. I'm always looking at what is it really costing the vendor, the business over here, and what is it really costing us at the city to do any cost of doing business on both ends. And there's some sort of magic there. Finance office knows about there. The other people know about theirs. This new system will automate things very well. What's it called? The SCUTS system? SCUTS. such system will automate some of that for those people who are not like some of my friends who do on the back of Post-its accounting. Um, uh, it will be fairly automated. So the cost over here, meaning business, and the cost over here being we're fairly automated, should be minimal. And so this money in between is the interesting part for me. There's various discussions about where that's supposed to go. It's supposed to go to beautification. It's supposed to go to my birthday party, you know, all kinds of different things. Not really, kidding. That's right, we're online. I think that's an issue too. I'm always looking for everything we can do to put into debt reduction at this point. That's really one of my huge priorities. Those of you who read my volume of emails today saw that that was one of my things. So I would like to open us up to the council. I'm going to go around in order on my order here sheet and get a few thoughts from each of you, and maybe we'll stir up some honey or wasps. We'll see. Councilmember Labar. Councilmember Case.
Thank you, Mr. Mayor. The sales tax is collected by our retailers in our community and out of our community. I'd say that the majority of our taxpayers don't reside here and don't have storefronts here. And so they collect the rate, they remit it to the city, and the process of processing, of data entering and accumulating all of that information into the accounting system, the sales tax accounting system, if you will, and reporting is quite an arduous process. It's not as much as it used to. Before I left employee, we did implement an online filing system so that they could complete their returns online, remit payment, and get on down the road. It eliminated the paper and such. Now, in my experience and with most retailers, and not everyone, of course, because as you said, some people still use Post-it notes and shoeboxes, and that's their choice. But a lot, and I would venture to say the majority of retailers use some sort of point of sale system, which enters the transactions at the time the sale is made and updates a mirage of accounts that they use to account for their sales and then their obligations with regards to those sales, whether it's the state sales tax, the city sales tax, or the county sales tax. And the beauty of that is, I mean, back when this was implemented in the 30s and even up to the 70s, accounting was done with sales journals, and then they're posted to ledger, and it's all paper, and it's a process that over the years with the rise of computers, they were automated into a software program that does that simply by entering the transaction once, and it does all the magic, which is awesome. So I know that's a long story, but it kind of gives them some chronology of the evolution of the reason for the credit. And what it is they get to keep a bit of what they collect as compensation for that arduous task of the sales journal and the posting to the ledgers and creating the financials and calculating the liability and then processing the return and remitting it. That's not the way it is anymore for the majority of retailers. Granted, there are still people that do it the old-fashioned way. So I would suggest that the position that this is cumbersome to our retailers, I just don't see it. As I said, it's cumbersome to some, and In business, we have choices. I have a bookkeeper that does my books for $75 a month, worth every penny. And so I think we're at a position in our world and in the accounting and for retail and such that it can be accomplished at a very minimal cost for the most part. I'm blanketing this, and it may not be true for everyone. So the argument that it's an arduous process and is cumbersome upon them and that we should compensate them. Number one, they're being compensated by the state. And if they are going to be compensated by the city in this manner, then in my opinion, they're double dipping for doing the same task because the same numbers go into the tax returns. So, and I have another point, if I may take a moment just to raise another point.
Can I ask you quickly, I'm sorry, segue. a
No,
little.
that's fine.
You said the state already reimburses them. What?
The state credits for, on behalf of the county and the state, 3.3334% now. I'm sorry, it did change this month. It went up from 3.3333.
But isn't that our number that we use? If we don't,
We
Override it
account
as a
for
home rule?
it. We don't provide the credit. But when that went away in 96, it was agreed at the time that that would still be accounted for separately. It's in a separate line item in the general fund, separate from the sales tax itself. Follow me? Separate line
yeah,
item.
go ahead on, you were making another point. Go ahead.
So
Thank you.
the other point is just the process is retailers collect sales tax daily on their daily sales from the 1st of the month to the 30th of the month. On average, I know some have 28, some have 31, but we'll say 30. And they don't remit those collections until the 20th. And so they're holding those city funds anywhere from 50 days to 20 days, right? Follow me so far? And I would venture to guess that those idle funds are held in a bank account. I doubt they keep the cash in their store. And I would suggest that idle funds in a good run business is invested to earn a return as with their other idle funds. And they account for the liability on their balance sheet instead of as revenue from their sales as they would on the income statement. So in that 50 to 20 days, they're earning a return on the city's funds by holding them. So I would suggest that there's a benefit there in that respect as well. I've been thinking about this a lot, and with my experience and my background with my degrees and my working in the accounting world for many, many years, this is my observation. And this comes also from working in the world of auditing concessionaires for the city of Colorado Springs, from golf courses to the airport to many other areas where they have point of sale systems. And so this is my observation and some thoughts that I had that I wanted to share with the council. Thank you, Mr. Mayor.
Thank you. Councilmember Neal.
In the interest of time, Kelly really covered the first point, which is the labor is negligible in this day of computers. Back in prior to 1996 and earlier, when they did have the vendor fee, a credit, I could understand it. And I've listened to the arguments about indentured servitude and that they did ring with me. But then when I started looking at the numbers and the timeline and the fact that we're in an age of computers, I think the labor is negligible. So I go to the second point in my mind, which is where the council has ran with the intent of getting out of debt. To get out of debt, we got to put our revenue that we do get against debt reduction. So if I'm taking away revenue at a time where I'm trying to take the revenue we do have and put it to debt reduction, I'm working against myself. So there's a second factor in my mind which says I would be against doing anything with the vendor fee. But then if there's a third point, which is if we were to do that, which is counterintuitive when we're trying to decrease the debt, who would end up paying? Because to decrease revenue and fulfill your debt reduction at the same time, it means something's got to give in the middle, and that means services. I mean, what the city staff does for the citizens, and I ran on citizens first, so the citizens would be paying the bill for this, so it goes directly against what I was elected to argue against. So I would be against it for three reasons. But I'm willing to listen to other facts. I did go through the Price Waterhouse Cooper, and the numbers are just incredibly compelling that with the state's 4.0% that they get, I believe that most businesses are actually overcompensated already at the state level, because the averages run from, well, there were 24 studies from 1956 to 1983 that the median cost was 4.4%. And another study, it ranged between 2 and 3.75. Another study, 3.18. Another study, 3.48. I mean, just study after study, everything's below the 4% for the most part. So they're already overcompensated. So to give an additional percentage back, just it's not something I would support. So I'll pass the baton.
Thank you. Councilmember Paff.
I'll wait for others.
Okay. Councilmember Zuluaga.
I'm other. So Jason, you talked about being careful not to conflate the numbers between the percentages. And when we look at those numbers that are on this Price Waterhouse, the statistics are that the smaller businesses, 150,000 to $1 million businesses, the cost to collect sales tax reflected on the sales tax, not on their sales volume, on the sales tax, which is really comparing apples to apples in my mind, is like 13.47%. And there's a large number of businesses in our community who have that sort of cost that it's costing them. And this is statistical across the country. And so in the next bracket, which also is some of our businesses, is 5.2%. So from what I see, looking at these charts, the very first compelling consideration for me is that we have experienced COVID for the last 6 months in our community. The city has not been harmed at all in that process, and our business community has. And that for me is a very real consideration. And we've been holding their funds now for many years under the idea that it's supposed to go back into a specific fund to develop downtown. I come from a philosophy that he says less government is stronger. A businessman knows how to spend his money a whole lot better than the government does. Dollar for dollar, a businessman can squeeze a whole lot more out of it than a government can. So we're holding their funds, in my eye, that are not rightfully ours. The state has acknowledged that it's a 4% return to the vendor, upped it from 3.3. You know, I think of Ronald Reagan. Ronald Reagan did something very counterintuitive, and he lowered taxes. And the government's taxes, revenues increased. And I think it's very important to look at your business community here and say, what can we do as a council and as city administrators to facilitate an encouragement, a sense of cooperation with the businesses rather than taking out of their pockets continually. So I am very much an advocate for introducing the return of the vendor fee to the vendors. Darren, you talked about stakeholders. Well, Steve has arrived, so we have two stakeholders at least represented, maybe three, I would say. And our stakeholders are not just our school district. School district is, and as was pointed out when we looked at the budget numbers last council meeting, the city does take a vendor fee for administrating the taxes that they collect for the school. So I see it as hypocritical that we want to continue to take from our businesses, but it's okay for the city to take from the school. But we have other stakeholders, and that's our businesses, our business community, our stakeholders, and not to consider them as viable and important and integral to the success of our city is really, it's battling in the wrong direction in my eyes. So, you know, you talked about a 2 or 3 year implementation period of this vendor fee. I mean, that's just, to me, that's really unrealistic. The business community needs to see that the city's on their side now. And you know, what hasn't been talked about here is that if we go with a 4% vendor fee that's equivalent to the state, there's a cap on that as well. So you look at, what is it, vendor fees, what, 300,000 or something, rough numbers? The amount that comes into the coffers.
Yeah, well, it's closer to about $225,000 based on, but not all general fund. Like I said before, yeah, $74,000 in this.
No, don't go into the weeds.
Sorry.
So general number is $225,000.
Sure.
So $225,000 it's not that amount of the pie that we're looking at. We're looking at the big box stores. They will be capped. They'll be capped at the, and I think, what is it with the state? It's like $1,000 per period or something. So when you look at the small businesses compared to the large tax generators, then in my eyes, it's really not as significant as the city's making it out to be. And what I see in this is that implementing this now is powerful. It's powerful to our business community. And it's a step that is reasonable for us to take. We saw an increase in sales tax while all our small businesses were closed. We saw an increase in sales tax when our small businesses were closed. That scares the heck out of me. It scares the heck out of me because we as a city are not harmed by our small businesses staying closed. That's very scary. Next point I have is the percentage of the tax sales. It's about the percentage of the sales tax. It's not on the revenues from the business. So I think that's an irrelevant comparison. Rusty's already talked about indentured servants. I ran a construction company in Arizona for a number of years, and we were required, multiple. I lived in the Phoenix area, so there's Phoenix, there's Mesa, there's Glendale, there's Peoria, there's like, you could do construction in a number of those cities, and you were required every month to file on time each of those jurisdictions. And each of those jurisdictions would give you an offset that would give you the vendor fee for getting your paperwork in on time. It's just respect. To me, it's respect. It's respect for your businesses. It's a respect that their time's valuable, and small as it might be, it makes a difference. So that's about all I've got for the moment.
Thank you. I wish I had a whiteboard. So I want to put this really simply because I do have a accounting background, believe it or not, but I want to do this very simply. So let's, and I'm generating this to at least two people who know what we're talking about here. And Jason, I ran your numbers on your spreadsheet, and I'm going to look to you to explain some of that in a minute here. But let's take a simple example, or maybe it's simple to me, which is all I need. Let's say we bring in $1,000 off our 2.9 sales tax rate. Let's just say it's $1,000 from somebody. So we now have, no. So we have a net sales of $1,000. So we have what, $29, right? Well, but that's divided up amongst other people, right?
It's 3%
The
for the city.
Woodland Park is 3%.
It's 3.
3, yeah. So 1,000, let's say do 10,000 so I don't have minimal numbers. 10,000, and so Woodland Park has $300 of that, right?
Mhm.
Okay, and so the vendor fee is that we're talking about is based on that $300, not the 10,000. And I'm speak up, throw things at me, whatever, as we go along.
So their liability is $300.
Right.
Correct.
So, so the vendor fee is based on that $300, not the 10,000. And that's the money that we retain. Now, so am I to understand that out of the 2.9 state tax, they have another pocket of money they call 4% vendor fee. And they are also, we hold our $300 at this point. And so the state is actually kicking back there, whatever 2.9 is of times whatever, of 4% of that. I don't have a calculator, but anyway, so they're kicking back that to the businesses already. Is this true? So they're getting back the state's money, but they're not getting back the city's money at this point. Okay, cool.
And the county.
And yeah, and these other districts too.
Special
And the other special districts, right? Yeah, I was just looking at Woodland Park alone. And Teller County, special districts, school district. So if I may, did I step on anything there? Are we close enough? My understanding, thank you. You have a spreadsheet, and I'm going to get to the audience because there's some people here who want to speak. And by the way, I'm gonna allow them to. Normally in work session we don't do that, but because we shoved it off of our regular calendar under public hearing in the work session, I'm going to give Tanner and Steve Wolf the couple minutes each, 5 minutes, whatever, and let them talk. But first, I want to, if you could run through your spreadsheet a little bit. You've got a cap amount. You've got taxable gross sales. I think I understand that. And then cost of business, you've got red boxes to play with. I ran 1% and 1% just to say that there's some cost of doing business on both ends. But explain to the public, which includes me, no, wrong one.
So if we plug it in here, Darren, how do we get to it?
Yeah, you can pull it up. You got it. Sorry.
No, it's on the flash drive.
That's Rusty's spreadsheet.
Yeah, I guess
We
he's
don't want to look at that.
really
again.
oomped it up since then.
Is that what that was? With the knobs?
All right, so I'll try to explain what's happening here. But before I get to that point, I have to explain what you can't see in the background, which I password protected and made sure that it can't be accidentally given out where it doesn't belong, because we're prohibited from giving out sales tax information of businesses. But I want to say that I used 2019 actual data to create this. Darren's sheet was based off of budget numbers. This is the actuals from last year. So take that for what it's worth. How accurate that might be is a real picture. On one of these tabs, you can see, again, I masked kind of actual sales tax data and jumbled up everybody in different quartiles, so you can kind of see what stores might be affected in different zones based off of our data. So you can see, the top 40 vendors remit 6.5 out of the total budget amount 2019, 2018. So you get that information. So in the background on those calculations is what it's pulling actuals.
Jason, can you widen, there you go, column 8.
Zoom it out a little
Trying
bit
to, it's-
and kill minimize the,
Just double click it.
Rob, you might minimize the display if you could, please.
This one?
Yeah,
Yeah.
that one, kill that. Yes,
Yeah, there you go.
there we go.
Okay, so it's
Cool.
not letting me expand this.
Go to,
Double-click on that.
go to,
Double click on the right-hand side of the,
Right.
no, up,
It's
there.
It's not letting me.
I found this out today. It's protected. You can't.
So you can't adjust it. I apologize. It works on my screen, which apparently is wider.
So go to Zoom up there.
But you can see basically this is just adding up.
Go to view and zoom at the top. Oh, there you go. There you go.
Other way.
Other Zoom.
Well, it won't zoom in either. And I apologize. I'll just explain what it's doing. We can get that done. But basically, this is just taking top 20. If you were to take the 21 through 40, that's their number. Top 40 is all of the businesses in the top 40. I suppose this is just that breakout of 20 businesses, et cetera. Going to your point, I added a cap into this. So if you wanted, and I have to say that currently this is on an annual basis, not a monthly basis. So if you wanted to annualize that cap, you'd have to put the cap at potentially $12,000 as opposed to $1,000 per remittance period
Cap of,
what we're allowing the businesses to keep of the remitted sales tax on behalf of citizens. And so this is the total taxable sales of the business. So if you have a gross volume of taxable sales of $100,000, this is our total combined tax rate here in Teller County, Woodland Park. I know that there's a couple of places where we have special districts. I don't believe we have businesses up there with the King's Crown or whatever it is. They have their own, but this is generally what a business would be looking at. And so here's where you can put in, what do you believe the cost to a business is based off of the sales tax remitted? This is the 3% portion of that sales tax that a business would have. So this is their total costs off of a $100,000 business at 2% cost of the business on an annualized basis would be $169.80. You get the sales tax rate, Teller County rate, and the special district rates. These are all collected by the state. So the state currently has a 4% remittance allowance. So when the folks go to submit their sales tax to the state, they get to keep $116, $40, and $10.90 from their state sales tax returns. School district, oh, sorry, $20. School district, this is my assumption. It doesn't have to be this way, but I figured if we're doing a 1% for the city for a vendor fee, that would apply to the amount we collect on behalf of the school district. But rather than combining it into one amount, kind of broke it out as to what that might look like. And then this is the total vendor fee if we wanted to change. So the ones that are in red are the ones that you're able to change. The rest you can't manipulate because some of these formulas are a little bit complex. For instance, this one here, as to what it's doing and how it's doing it and where it's looking and all these things. So if you wanted to say, we as a council believe that the sales tax burden, the indentured servitude, as you might call it, or a vendor fee, however we want to arrange it, we want business to keep X number of percentage, that's where you'd put that. And so you'd see in this particular scenario, if the amount was capped at $5,000 a year, this particular business that makes $100,000 in gross taxable sales would end up, based on these assumptions, needing to spend about $170 and being whole plus $47. On this side, this is where it goes into the actual vendor fees based off of the sales tax data from 2019. And so you can see that the top 20 businesses that produce this much of the sales tax, and this gives you the percentage of their total, even with a cap, this is what their vendor fee would be without a cap and with a cap. So you can see the difference. Yes, it lowers it some to some degree. Again, we can always, based off of your direction, make a different analytical tool. Over here on the left, this is where it talks about, based off of the assumptions, the number of businesses that would fall into these categories based on total taxable sale, based off of our current business's structure, and what percentage of our business community falls into these areas. This is the vendor fee range to kind of break it out to show you why they're falling into these areas, and what they could reasonably expect. So at these two rates, 2% cost of business, at 1% vendor fee, 74% of our businesses would expect between $0 and $15 a year in vendor fee that they could keep, if that was the assumptions at 1%. As you change that, this kind of breaks out and changes. Because it's capped at 5,000, you can see we would have 44 businesses that could expect anywhere between $300 and $500 or $5,000. So this is again based off of our actual numbers. Here's kind of the impact to the city with and without a cap. This is the revenue loss based on these projections. If we were to go with 1%, as you change that number, you'll see these change and update as well. So I don't have a keyboard in front of me, so I can't change it. But you can kind of see what it means to an actual business based on these numbers.
Yeah, I ran this one, printed it out, and then I ran 1 and 1 for
So
the
you can
percentage.
see we changed this to 3%. It'll go ahead and change the cost benefit to because now they're getting more money. Yeah, it changes what the fees would be. It changes how they're distributed as to what they can expect. It changes the total number of businesses and what they can expect. And it changes the total impact to the city, as it were, which more or less lines up with Darren's memo.
What's the one you can't read on the with a cap?
With a cap, yeah, that's the hard part without
Oh, you can't-
expanding
Click on the
this up.
cell and see if it shows in.
It shows a formula.
Oh.
So
Oh.
I apologize, I didn't think about that. When I locked it again, to the public, I'm not trying to hide information other than what we're legally required to hide.
Well, it was K11, so it's out there, K11.
Couldn't you just right click?
Equals
It's
K11.
160, 131, 47.
What is it?
So this would be the impact to the school district
160,
or to the
131,
city
47.
if we had a cap involved.
Jason, are those local businesses or are those all,
This is all
all
sales
businesses?
tax remitting. And so that's the other
It's not
point that was
just
brought
local,
up
small business.
a while ago. I don't remember the exact date, but one of the meetings that somebody brought up is we want to keep this potential 203, combining those together, $300,000+ in our community, keeping in mind that a large percentage of our businesses are, I'll use Lowe's as an example. They come up, sell a dishwasher or a dryer. Those businesses would be getting this remittance as well, not just local, but you'd have to give it to everybody to the same, make the rules the same for everyone. Otherwise, we could look at being arbitrary and capricious. So that's how the tool works. I don't know if there's any specific questions. And as I said, if you want to meet with me one-on-one, I can show you exactly how it's calculated in the background, but I didn't want to make this, just in case it got out, private business information publicly available, because that's not okay.
Thank you. I played with it this afternoon and tried to run some numbers.
I don't know if you want me to switch back. Are you?
Can you tell me what is the
Rob.
total
Not
number?
bad for an attorney.
Oh, sorry.
Sorry.
Total number of businesses you're looking for?
Well, what's that? I have to, I'll throw out there, I have an undergrad in business management and finance. I spent 2 years eating and breathing
Oh.
Excel. So this is this was fun for me. I don't do it the same way that Rusty did with his model because I was always trying to keep the calculations and keep it simple on the front end as the deliverable. But if there's any questions on how it works, sure.
Not so much on how it works as far as you have 1,085 businesses calculated in this table.
Correct.
Of those, how many are the likes of Lowe's who sell a dishwasher?
So that's where you can actually go to the second tier
Yeah.
without me manually going through and saying which business is located here and not.
Okay.
This gives you literally every business that remitted sales tax to us in 2019, all the way down. I did not include any negative filers or zero filers. I figured that was a waste. But this includes every business. So for instance, Sirius XM Radio, I would imagine that they're not located here. You'll see Walmart.com and Walmart as two separate filing entities, which I thought was interesting. Amazon.com is on here. Automotive rentals, I don't know if that's here in town or not. That information exists, but I didn't want to put it in here. I can tell you anecdotally from our business licensing piece that a large majority of our businesses are not physically located inside of Woodland Park.
The reason that is because if an online company,
Mhm.
you can order something online that's available locally, then it's subject to your local sales tax. So if you can order a radio boombox from Walmart online, a boombox.
You know, they're about this big, they run on
yourself.
batteries.
Ones you put on your
Cassette
shoulder.
tapes.
I
Let's
still
say-
have one.
Let's say you can order a DVD player. How's that? I'm still dating myself. Anyway, if you can order it online and have it delivered here from Walmart, you can also go to Walmart and buy it here. And so since that nexus is there, then that online order is subject to our sales tax.
And I guess I would add a caveat, because with the change in case law with Wayfair v. South Dakota,
Yes,
basically any and all online retailing to local jurisdictions is supposed to be taxable. This is why we have the SETS program being created, because in South
Ah.
Dakota, it's all state collected. Colorado, it's not. We have different rates all over the place.
still dating.
And so part of the impetus of the SETS program, and I'll get more of a discussion when I actually get the time to finish the ordinances to get us there. It's complicated in Colorado, so that's why they're trying to create this easy thing. But one of the things I was surprised to learn as I created this and did some little analysis on it was we already have a lot of large online retailers that are remitting here. So we might not see the boom in sales tax revenue from having the SET system, because a lot of these big retailers are already here. But we could run further analysis as to exactly where these businesses are located. It's a little bit cumbersome because I don't think the sales tax software system is designed to do it that way. But we can try to get that more information. But to give you an idea, you can look in here. Again, I jumbled these up so they're not in order, so you can't tell who gets what or what portion. And I tried to keep the groups broad enough so that you can't really take this number and say each of these get X amount to try to mask that. Typically, the standard is 5 to 10 aggregated. So that's why I'm doing what I'm doing. But you could look through that and see what businesses are located where to some degree. A lot of these I didn't recognize at all, but you can see like Safeway's here. So, now the big top ones are pretty easy to find, but like Amazon is one of our top 10 remitters of sales tax in Woodland Park, or top 20, excuse me. I thought that was interesting. Any other questions?
Seeing none, thank you. Tremendous tool, tremendous amount of work. I also do Excel and understand implications there.
Thank you, Jason.
There's a Q&A up there.
I'm just pulling that up. It's a great discussion, but not what I was looking for. I don't know if I dismissed that answer. I don't know if there's a question there.
They're looking for the planning meeting.
Okay,
There's been some confusion.
Okay.
People are coming to the
okay.
Hour and 5 minutes we'll be at the planning.
Yeah, I was asked.
won't, but-
I was asked to tell you that 7 is when they start. So if we can clear.
Yeah, 6:45 we'll get out of
So
here.
I'll dismiss that question because hopefully we're good. All right.
Thank you. I appreciate that. Tremendous, tremendous input there. I'm going to ask that Tanner Coy has a short presentation from the last time we had a public hearing, so we'll allow some latitude there. But if you can make it 5 minutes or less, I'd appreciate it. Can you do it in 5 minutes?
I can try.
Okay. Close as you can.
I do doubt it.
No viruses, right?
Nope.
We know where to find.
Just a harmless one.
We know where to find.
The worm.
Tanner Coy, 240 East Highway 24. And thanks for letting me speak tonight.
You get in the microphone.
Is that better?
Yes.
Thank you.
I'm not very good with this thing. Okay, I heard quite a bit tonight. There's a lot to comment on, but I'm going to try and keep this brief. As someone who's been levying the sales taxes for numerous entities through my business for so many years, accounting for those and reporting and remitting them, I can tell you it is not as simple and made as simple by technology as some of you seem to think. We just heard the city attorney say that in Colorado, we have many different rates all over the place, and it's complicated. And that's true. The sales tax laws have changed with time, and that has complicated things for a number of the retailers, such as myself, hardware stores, and any that will deliver outside of the immediate taxing area. So the costs of complying with sales tax laws include things such as training for personnel, documenting tax exempt sales, customer service relating to sales tax issues, sales tax related software and license fees for that software, programming and servicing the cash registers, which that's become incredibly complicated since the law changed a couple years ago. Returns, remittances, refund credits, sales tax research, dealing with sales tax audits and appeals, and other compliance costs. There's a lot that goes into it. And as we've seen from the PricewaterhouseCoopers study, businesses incur a cost as a percentage of sales tax collected between 2.17 and 13.47%. That's quite a bit, and that's on the sales tax collected. So if we just take 5.2% as the number, arbitrarily picking one, and say that the state gives a 4% vendor fee on the tax revenues remitted to them, and that's overcompensation, well, mathematically, that's not consistent with the report anyway, that we seem to have chosen to use and agreed to put some credibility into. Also, that money is only on the revenues paid to the state. It is not on revenues paid to the city. So all the costs associated with tax collection and remittance to the city go unreimbursed. I saw 4% used as a vendor fee. You were told that's the vendor fee provided by the county and special districts, but that's not the case. Their fee is still 3.33%. The state increased theirs to 4% when they implemented a cap. So I just wanted to clear that up. I also built a spreadsheet I'd like to share with you. It's also active. We can use it to change numbers however we wish. To begin, as you see, the PricewaterhouseCoopers table of compliance costs. And I've heard it said earlier and correctly that the vendor fee itself is a percentage based on sales tax collected. So when we say 4%, that would be equivalent to the numbers in this row, the top row here, not as a percentage of taxable sales. So this lower row here is not really relevant, but we can talk about it. And I did include those calculations in my spreadsheet. So this table right here is the current vendor's fee scenario in the city of Woodland Park. And this is from a business perspective. Okay, I used 75,000, but since Mr. Myers used 100 in his spreadsheet, let's just change that. There's an effective rate of 8.49%. It breaks down as so with these taxing entities. This is the percentage of sales tax revenues that go to each entity. Okay, the state of the sales taxes collected by a local business, the state gets 34%, county gets 12%, and so on.
Real quick, I'm sorry. So we can have everyone that's out in the audience see this. We want to share it on Zoom if you don't mind.
No, I don't mind at all. Instruction?
Share screen. Choose yours. There.
Thanks. Sorry about that. This is the current vendor's fee paid by the taxing entities. 4% to the state, 3.33 from the county, 3.33 from the ambulance district, 0 from city and school. This is the amount of money that equates to. This is the effective rate to a business. Effectively, it's 1.95%. If you want to consider that as a percentage of taxable sales, that would be 0.17%. That's where businesses in Woodland Park fall right now today. Here is proposed vendor fee as one proposal, I guess my proposal, that we change these two cells to a 5% vendor fee, equivalent with what used to be the case with the state long ago and some other municipalities in the state. You can see how that changes the effective vendor fee rate paid to businesses in Woodland Park. That would put us at 4.36 overall, or 0.37% of total taxable sales. And you can see where that falls in this range. Here is, if I understood one of the points made in the staff report correctly, maintain the tax credit of between 0.82 to 1%, accurate based on the PricewaterhouseCoopers study, showing that that's the maximum compliance cost. That number is right here, 0.82%. It's a percentage of taxable sales. In order to achieve that, the city would have a 27.4% vendor fee, and the school district would have a 75% vendor fee. So I put this in here just to illustrate the difference and perhaps misunderstanding in how the vendor fee is calculated. I don't think anybody was actually proposing this, although that's what seems to be written in the staff report. I wanted to point that out so that from a mathematical standpoint, it might make more sense to you. Okay, well, we love the idea of the vendor fee and we want to do something, but what are the costs to the city? So this is straight out of the 2020 budget. These are the revenues to the general fund and the 410 fund and the combined total. A 3% vendor fee would cost, would have budgetary impact of those dollar amounts, 3.33% and 5%. That is without a cap. That is just a flat fee across the board. You're probably familiar with these numbers because of the spreadsheets you've been looking at and the study you've been doing on this, so I'll move on. If a cap were implemented, that changes. Now, not having the specific data that the city finance department has access to with every entity that pays tax and how much they pay, I cannot possibly quantify and correctly calculate the effects of a cap. But the third recommendation made by the staff is to strongly consider more targeted policies, blah, 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 because 60%, more than 60% of the benefit of the reintroduction of the vendor fee would likely go to our largest corporate entities. So I take that as 60% would be going to large corporate entities. Those corporate entities are the ones that might exceed whatever the cap is or would be limited by a cap. I've also heard from city finance numerous times that there are the big five. There are 5 retailers in the city that they consider the primary sales tax payers. So I just use those numbers and put in a cap. That cap, if it were equivalent to the states, this would be the actual effect to the city, not this. A 5% vendor fee with $1,000 per month cap with 5 businesses.
Mayor Carr, may I? Tanner, please, it's a work session, so Tanner, I'm Rusty, you know me, I know you. We've seen a lot of the numbers. We've got about 40 minutes left. We have 2 other topics.
Can I just make a point of order? I think that the mayor runs even the work sessions.
I asked for the floor. I interrupted, Jim. So I'm asking, we're past the 5 minutes.
I'm
Tanner,
gonna
if you
let
could-
him finish here. I think he's pretty close to finishing. I think the business license won't take very few minutes. Please finish up.
So this is an effective way of reducing the impact to the city while concentrating the benefit to the local and smaller businesses. I would propose that cap be something like 500. And you can see the impact to city drops to something that's, I think perhaps you've already exceeded that number in excess revenue due to sales tax growth this year. What about the school? Well, this is again straight out of the 2020 budget. Same scenario. With a cap, without a cap, 3.33% is just over an $80,000 impact to the city. With a $500 per month cap, if there were 5 businesses that would be limited by that number, you could actually increase the vendor fee from the city to the school to 5%, which would increase the benefit to local businesses and reduce the overall effect to the school district by several $1,000s. And I just use those numbers as examples. So wanted to share that with you as just to try and clarify the numbers I've seen, like you have, Rusty, the lot of math and a lot of things written in reports that you've been given and have chosen to read that are not correct and not necessarily from a business standpoint. So anyway, I do have messages from 2 other business owners to give you. One is
Well, we
from-
don't read those into the record unless they're here. So
Oh, I'm sorry. I thought the new policy was if they
Nope.
couldn't make it, they could send a citizen with
Nope.
their.
Nope.
Okay.
can put in the record.
I
but
have several. I'll
Not
ask
read
for
into
that.
the record. Thank you.
Any questions?
If I can, I just want to, there was one thing he said there, that technically based on Jason's analysis, there's 20 businesses that provide 80% of the sales tax generally, right, Jason? 67, okay, 20? Okay, top 40, okay.
And that's reflected in the spreadsheet.
Yeah.
Well, that means a cap would be even more effective than what I'm showing here.
Possibly.
And then also, you know, I can go change the spreadsheet that I gave you to have those accurate numbers. I was told 4%, that's what I put in, but if it's 3.33 for county and special districts, I can make that change so you have,
Bet you wouldn't take you half a day to do that.
no, it would take me a few
I
minutes,
know.
assuming I don't get interrupted, but I can make sure you have that info.
It's really immaterial.
All right, thank you.
Analysis purpose.
Appreciate it. Thank you, Tanner. Appreciate those.
Do I need to unshare this thing?
Yeah, please.
If you'd like to pass those on to the city clerk, she could pass those to the council if it's okay with you.
Mr. Mayor, may I
I-
make 2 comments while we're waiting?
Certainly,
Just short.
sure.
I want to just chime in and say that the debt reduction component that I know we've all mentioned, including you, Mr. Mayor, is very important on our radar. And I would just say that I think we as a council are here to serve our citizens. And we have, of course, we have businesses that are citizens that live here. We weren't elected to represent the businesses, although they are our partners in the success of our community. Not to say that they're not important, but we answer to our citizens. And we have a responsibility to be good stewards of our resources on their behalf. And I think what we've talked about on our radar immediately is doing that in the way of planning for debt reduction right now on behalf of our citizens. And that's a really good use of resources. And I guess I just ask, if this is such a pressing issue for our businesses, I just wonder where they are. So thank you, Mr. Mayor.
Thank you. I'm going to let Mr. Wolf come up and have a few words as an interested party. Slightly interested party. Just kidding.
Yes. Hey, first of all, I'd like to thank you guys for what you did, Mayor, and for Neil, when you started the last meeting. That I'm sitting back there in tears, and thank you. That was special. I don't have an Excel or a PowerPoint, so I have to do interpretive dance. Yeah, so we'll get, there you go. We and the board and I, we're just so thankful for the 1.09% we're able to do. That is huge to us. You know, that's a lot of money, and without it, you know, that's 10% of our budget, and we would be in trouble. And you know, we're going to be down 1.6 million this year, based upon what's happened in the state. We prepared for that rainy day, and we're going to make it. And we can't have too many of those rainy days, or we'd be in trouble. When it comes to the vendor fee, naturally that would take away from some of that. But we're so pleased with the 1.09. We want to be teammates as well with what's happening here. What Tanner had presented actually showed me a little earlier what he'd showed. To me, a cap is a great idea to be able to have a cap on this thing if you choose to do it. Is naturally we'd like you to wait a little bit till we get through this whole pandemic thing. But if it's going to happen, the cap would be huge to be able to do. I think Walmart will make it without. I've been looking at their books too, and I think they're going to survive. And but they're the ones who would pay, that would get the biggest break in this thing. And so having a cap on that just makes sense. And I appreciate, Tanner, you presenting that. But you can see the impact it have on us. Tanner's numbers were accurate, and with 1.6 million down, it doesn't make it easier. But I come to you now to be able to say we want to be teammates. And if this council chooses to do so, we ask you to try to have as least impact on children as you can in doing that. And a cap would be very advantageous to us as we continue our work. So thank you for allowing me to have a couple minutes. And I've got to get on Amazon too. My 8-track has been eating up my tapes.
Thank you, Steve.
Yeah, you bet.
Thank you, Steve.
Thank you,
I don't
sir.
have to be dated all.
If I can, I just want to clarify one comment. I know there was a statement from Councilmember Zualaga about the city hasn't or didn't have an impact from COVID-19. I think I've demonstrated in our finances that we did, and the fact that we put more than almost 50 people in furlough as a result of COVID-19, and we're impacted by similar issues that Steve has in terms of state revenues that have almost brought any gains we would have in sales tax, which is just one form of revenue for the city, down where it's negligible or almost no increase in terms of revenue for the city. So I just want to, are we in as bad a position as many of our small businesses? Are we as in good a position as many of our large businesses? No. But I will say we were impacted, and our employees felt it, and they continue to feel it. I have not even brought all of our furloughed employees back from their COVID-19 impacts. So I just want to be clear about that. Thank you.
And we were impacted, but it's in the long run, when things get better, I most certainly understand the vendor fee. But I will say right now that times are tough for business, for our community members, for kids, and for all of us. So good luck with your decisions, and just know that minimal impact would be great.
Yep, I agree. I know where you're going with that. We're in such an unknown state here that we're wary of doing large steps instead of small steps. Mayor Pro Tem Labar, you deferred for later. It's later now.
I'm going to go ahead and pass.
Okay, thank you. Councilmember Paff.
I want to make some, excuse me, some basic, let's kind of lay some basic groundwork here. First of all, we run through the numbers. I've read the, what's their faces? Yeah, the Bell Policy Center report. Bell Policy Center is committed in its organizational structure to propose ways. I mean, it's just basically what they do. I've seen many of their stuff for some time. They take a more left of center approach, which is a greater taxing and spending approach to government. That's their orientation. It's kind of like on a national level, it's kind of like on the state level, the Independence Institute takes a more less government, less taxing. So that's the comparison between the two of them. It's useful information. They did their research, and it's helpful as we try to wade through everything here. But most of these kinds of reports are designed to argue for making sure we've got more taxation happening, to make sure we're supplementing and supporting spending by government. So let's just keep that in mind as we're looking at the Bell Policy Center thing. That's the entire purpose of it. And they try to make sure they put a lot of good information, which they do the work on, and it is good information. But if we take that as the central authority we're going to use to determine what we're going to do about a vendor fee refund, which that's what I called it, makes it a lot easier. Vendor fee refund, everybody. It's a vendor fee refund. If we're going to take that as the final authority on putting perspective over a vendor fee refund, then we have to also keep in mind what the orientation of the organization is. That's the first groundwork thing I'd like to lay out there. The next thing is, let's just talk about the economic argument here. Every dollar that goes into government is not an investment dollar. So whenever we are thinking about money that is confiscated through taxation, and confiscation is an appropriate word. We do it voluntarily in this country because we have determined that there's a use for government. Well, okay, let me stop that for a second since Steve is leaving and make this other thing. The school district is not a stakeholder in what the city does in the government. Since Steve has publicly threatened recalls, I just want to make this very clear. The school is not a stakeholder in what the city does. The school is a stakeholder in what happens in the community in general. So just wanted to get that out there. The economic argument is every dollar we take out of the normal course of business in the economy and put into government is not an investment. What we're determining when we take money out of businesses or individuals through property taxes or whatever we do, that's money that goes to do something we've decided we want the government to do. It reduces the amount of investment and productivity that takes place in society as a whole. If we don't think about that with every dollar we spend and every bit of taxes that we bring into any government entity, then we're totally missing the entire point of this entire discussion. Doesn't matter what Price Waterhouse thinks or Bell Policy Center thinks or what I think or what anyone on this council thinks. That's what's happening. That's the economic impact. So we need to do so very purposefully and recognize if it's necessary. I would submit on that point that even though it's a small dollar amount, whatever it would be for a vendor refund, that money goes into productive activity. That whether or not the business owner lives in this community still impacts our community. So I personally take umbrance with a discussion that says that businesses are, because not everyone that runs businesses in this city are citizens, that therefore, we're not accountable to them. Well, we're accountable to them because our citizens shop there, work there. When businesses thrive, they provide more services, more items, and that's useful. So I think, yes, it is well noted and I think appropriate to note that not all our business owners are voting citizens, but it still affects our citizens when these businesses do well and when they expand their operations. I would encourage everyone to quit mocking the idea that some people have stated, which I think is an excessive statement too, but quit mocking the statement of indentured servitude. Listen, as a fundamental principle, all taxation is theft. Now, we voluntarily go into this because we know that government plays a role in our lives and provides a useful service in some areas. But we're still taking money from people to do this. So that's a foundational thing too. So, we can bring up all the statistics and all that's important as we're evaluating the precise steps we're going to take. But let's remember what we're actually doing here whenever we do tax. That's an important thing. And finally, when we talk about COVID-19 and situations like this, government is rarely honestly impacted by these circumstances. It is always individuals and businesses. It's stuff in the normal economy that are affected. It's not primarily the businesses. We have furloughed, and I think the city manager was right to consider furloughing certain people because of what at the time the decision was made was the potential loss of revenue. We did not lose any sales tax revenue on a dollar for dollar basis, on a comparison basis. We probably did lose potential extra sales dollars or sales tax dollars that would have come in to the city had businesses been able to stay open. So, but does it impact the city? Sure. But it doesn't, it's not a major impact. The city's coming back. Some of our businesses are not. And this is what a perspective that we've got to maintain in everything we do here. So to just off the top of our heads say, yeah, no, this is a bad idea because we won't get revenue. There's going to be revenue coming in. If we are giving money back to the citizens and reducing what we're doing in the form of taxation, there will be extra revenue coming in the long run. That is a fundamental fact of economics. So the fear that we tend to bring upon ourselves and what are we going to do about debt reduction, what are we going to do about the budget, is greatly reduced by the fact that when money remains in people's hands, it is a productive use. So I think it is absolutely useful to consider whether to do this, particularly in these times where businesses are going to go under and have gone under in our city, and they're going to continue to do so. And we want to get something there back to them. And we don't want to use government money to do it. We want them to use their own money to do it because that government money just takes from someone else. It's the basic broken glass principle. Everyone sits around with the butcher when someone throws a rock into the glass in his business. And everyone at first is all concerned, oh my gosh, this is horrible, until they realize, oh no, the glazers are going to get money. Look at all the positive economic impact it's going to have here. And no one thinks about the butcher and the economic impact it has on him. This is an important thing to remember. So when we're just going to reject anything like this out of hand because we're worried about budget issues, the government's going to be fine. It's the businesses that we wonder about.
Thank you.
And that's our number one priority and the number one thing we should consider here.
Thank you. I'm going to try to wrap this at this point. The vendor fee issue, we have all kinds of models. We have some interesting aspects of it. I've tried to simplify it for myself, if nobody else, to understand. We look at the impact possibly, depending on how we run a model, to revenue into the city. I'm concerned about where that pocket of money goes. That's been a question for some time. I'm interested in making sure that both sides of the equation, the collector and the remitter, are taken care of in the intent of this, which was originally to help out with now not paper, but more automation. And then there's this huge amount of money in the middle of that. And my thing is, if we don't have a way to get it back to businesses by consensus, then my tactic would be to put it towards debt reduction, or target it exactly to some place and not have it out there as just a general use fund. I'm going to suggest that we have probably done quite enough to this at this point. We've got some models to look at. I'm going to suggest that we bump this for a couple of months to a regular meeting to have a discussion and have further council deliberations in private on their own to figure out what they want to do with this. We may have better COVID data at that point. And I know I'm just kicking the ball down the road, but I think it sounds to me like there's some division here, and I would really like us to have better information and maybe included in our budget deliberations a couple months from now.
Mayor Carr?
Yes.
I would concur with that. I think this has to be a part of the budget discussions, and so that I know there's going to be a push for council to look at debt reduction and doing both. You have to know what these numbers are so that we can make an informed decision. So thank you.
Yeah, if that's okay with council, we're not taking votes, but if that's okay, yeah, Councilmember Case.
I don't have a problem kicking it down the road. I stand with what Mr. Neal has said. I don't support this at all, and I think I've stated many reasons why. I think I would ask again that if this is such a pressing issue for our businesses in our community, that I would like to hear from them one way or another. 3 businesses does not do it for me. And I have talked to businesses that I do business with regularly. They don't see it as a problem. And so that's what I would ask of the community, that if we're going to talk about this again and kick the can down the road, then I would love to hear from a good section of them in our community. I was going to say something else. I would agree with the city manager that these kinds of discussions, because we're in the process of our budget season, absolutely it should be part of the bigger picture. To look at these things in isolation is irresponsible. Thank you, Mr. Mayor.
Councilmember Neal.
Yeah, since it's a work session, it's kind of, we don't have Tanner, I have a request. Everything that we're looking at, and I was trying to get past the numbers that you were talking to get more of a dialogue of, give me a rebuttal on the reasons that we've laid out. You touched a couple of them. Since there are numbers, this is a 2006 study, 14 years old. Can we get something that's more current so that we can discuss what the real labor is based on, I'm arguing that IT has made this irrelevant. Computers are everywhere, software applications are everywhere, we're rolling out products. Can you, this is an ask, it would resonate with at least this council member if in a couple months we kick it down the road, you have something current other than the 2006 so we can see what the real numbers are in terms of labor. I use the indentured servitude. It's from our telephone call where we talked. And that does resonate with me. But when I read that PW, and I went through it quite a bit, and I don't see the indentured servitude numbers jumping out at me that I would like to see with a updated study. And with that, I'll stop.
If I can, just real quick, that the study, the Price Waterhouse, we would look for new data. No one, even the state's decision on the 4% and cap was using a lot of this same data. It certainly need to look at, whoever's doing the analysis needs to look at a more recent study and data. I would agree. This is what we have right now, unfortunately. Jason and I discussed, well, is there some way we can do something locally to really understand what, find out what the cost is and be able to do that? That might be something, that's a lot of analysis.
It's a huge amount of analysis, and to be candid, we're kind of a unicorn state when it comes to this sort of thing anyway. So it's very hard to dig through those numbers. And I would only add to it, the argument for the 4% fee, but by the way, the statute does not say anything about the precise accounting procedures that are trying to be recompensed here. People would make an argument that the 1 to 3% fee that they pay the credit card companies, for example, would account for this. It is a cost of doing this sort of business. There's people, businesses of a certain size still have accountants. They use QuickBooks, and so the statute is just about compensating for this. There's no doubt the original bill was passed to meet this need that was all paper-based. There's no doubt about that. But it's not been, it's been longer than just the last 20 years. You can go back 40 years to computerized accounting of these sorts of things. And so, and nonetheless, with a lot of these sorts of taxes, including payroll taxes and other things too, having an accountant do this is usually the better way to verify that you're doing it. So there are lots of arguments for the cost, and all it is the municipality or the state decides, what do we think we want to charge for this right now, period. There's no firm rule when it comes to what is actually being compensated for.
So I'm going to wrap here. The reason we don't hear from businesses is really noise level, right? Seriously. And so one business at a time is noise level. But 2,000 businesses at noise level is some real money.
You bet.
So that's where we're going to leave that for now. If that's okay with council, we'll bring it up in budget considerations, and it will be a shorter conversation, but we'll have more data and more models and more fun stuff from Jason and Tanner. Thank you. We're going to move on to business license fees, and I'm going to read what I sent out to the council earlier today because I started this, and so I'm going to say that my initial thoughts on the topic were to examine adjustments that make sense in terms of relative business assistance and cost recovery considerations. One thought I had months and months ago was that Colorado charges very different tiered rates for resident and non-resident hunting and fishing licenses. So that must be a proper way to consider in a legal sense. So I put it on the table for council to discuss, which we're doing a little bit tonight. Arguments have been made that the varying fees should reflect varying overhead costs, but the state doesn't seem concerned with that with its sporting fees, which I find interesting. Another thought is to have an initial business license rate to consider setting up an account and database staff work with a lower rate for subsequent annual license fees for specific business already set up. That's from Councilmember Neal. And certainly whether the state average of $35 approximately or the rate of $50, which is our current situation, is not a determining factor in annual business overhead profitability. But any break we may find to assist is our duty to examine, which is why we examined the vendor fee also. Small dollars, but a whole bunch of them put together is a lot of dollars. I defer to the Councilmember Case for the first comments, if you will.
Thank you, Mr. Mayor. The business license is a vehicle with which to establish a business with the city as an active business. And the objective of it, as I remember, was to facilitate the enforcement of our sales tax code and use tax code. It could be argued that the initial fee when the business is first registered with the city really covers the cost of set up their account, all of the administrative things associated with establishing that business license account. Simplified. I'm keeping it simple just for you. And so it could be argued that maybe once that is in place, although annually there are maintenance items, not time consuming, not a huge encumbrance on staff, other than the volumes of paper that comes in for that renewal each year. And I think with our online system, maybe hopefully that's been simplified in some way with the paper side of it. But maybe after that initial and then just some maintenance from time to time, that fee is more justified up front and maybe not so much on an annual basis. Maybe that tiered effect that you mentioned might be right going forward for a continuing business. That's one train of thought that I've had. Maybe the cost, similar to the discussion or what I cited or commented earlier about the vendor fee, maybe that cost of that initial setup, $50 anymore. I mean, I remember when I worried about breaking a $20 bill because once you break it, it's gone. Now I think it's more of a $100 bill. You break it and it's gone. So I'm dating myself one more time. So $50 in the grand scheme of things anymore is not necessarily a lot of money. And I say that blanket again, not to say anything about one person or another. Those are just thoughts that I've had. I'm not really going to fall on a sword either way. I can see where that might be some relief, less cumbersome. And I would hope that we're working towards more online and less paper from an maintenance side on an annual basis for renewal of that license. So those are my initial thoughts. I didn't really come to a conclusion other than I can see that maybe some adjustment might be the right thing to do. Thank you.
Thank you. Councilmember Neal.
Well, I did talk to you, Val, and gave you what I'd heard from the businesses based on the discussion I'd had with city staff of what is the business license going to? It's to cover the administrative costs, the upfront costs, which is, I heard, okay, $50, but then I listened to some businesses saying, yeah, but once we register, it's registered. There's no further costs other than just a small maintenance, which did resonate, which is why I said, yeah, I can see the $50 upfront cost, but then every year thereafter, a lesser amount. And I threw out the 25, 35, some lesser amount. And then I thought about, Val, what you had sent in the email about the hunting license, and why, what's the logic behind why they go from a citizen where it's like $40 for a license and then it's $600 for a non-resident. And if we applied that, it would be like, Tanner, you're here in the room, you're a non-resident. I don't think you would be comfortable if everybody's paying $50 around it, and then all of a sudden you see a tenfold, you pay $500. So I understand what the state is doing on the hunting license. They're trying to cover a lot of hidden costs with the non-residents by jacking it up like that. I'm not really in favor of doing that to the businesses. So while it was an interesting point you made, I don't think I would want to penalize it. My personal belief, the businesses with some huge difference, like fishing and hunting licenses. I still like the tiered approach because the businesses want a little bit of relief. It makes sense that the city staff gets the upfront $50 to cover the admin, but once the accounts are there and you've identified it, verified it, whatever you have to do, then your maintenance costs go down, in my opinion. I would just like to see, before you jump in, if we were to decide to make some sort of a change, I'd like to see it staggered so that, again, going back to my budget argument, we're trying to do a debt reduction. I would hope we would maybe stagger it over a 2 years so we phase it in so that, maybe at 50 up front, 35, and then 2 years out, it drops to 25, something like that, so that the blow to our revenue stream isn't quite as heavy. Those are my thoughts for others to consider. Thank you.
Sort of like out-of-state tuition at CU. Yep. Councilmember Path.
Yeah, just to clarify on the tiered approach, proposals that have been made would not cause Tanner to have a higher business license fee. It would be the difference between domiciled and not domiciled business, regardless of the ownership. Whenever you have a business license, which, it is, relatively true that it can offset certain types of fees that help for services that relate to businesses. There are downside risks to businesses as well, too, which we have seen quite a bit of during the COVID-19 crisis. When businesses are required to register with government entities, they also are therefore potentially subject to penalties when they are attempting to, and I'm talking about civil type penalties, penalties of civil rights, if they are objecting to certain things that government does. So for example, there was a coffee shop in Castle Rock which decided that they wanted to open, and the state threatened to, and actually did for a time, take away their license so that they couldn't do business because they objected to the onerous. And now, since a lawsuit has just been filed by the House GOP minority leader objecting to the mask executive orders, saying that it fell outside of the Colorado Constitution, as an executive directive that was not legislatively undertaken. You know, these sorts of disputes take place, and when you license businesses of any sort, and there are myriad of stories of people who get into difficult situations because they're just trying to pursue their own, what they're doing. Now, we haven't seen anything like that in this city. I don't anticipate anything like that taking place in this city. I do know that that potentially can happen at some time in the future. I'm somewhat ambivalent on the type of business licensing we do because I think it is less subject to those sorts of things. I think that the type of licenses that bother me, and if we ever went to it, would be troublesome, is, for example, licensing hairstylists. Well, once you do that, then you make the challenge great for new ones to come in and do business, and it tends to help the established businesses and release them from competition. Our business licensing doesn't do that. It's less onerous. So that's that can be a useful and helpful thing to see. But anyway, I'm ambivalent on it, but the tiered thing, I would never support something that tiers out someone that's an owner that doesn't live here. You know, that could only be a tiered system for domicile versus non-domicile. So maybe we charge, which I'm not saying we should, but you could charge Amazon $500 and then the local business is domiciled here, nothing, you know, that sort of thing. So that's the only thing I would ever support.
Councilmember Zuluaga, quickly, we're gonna have to get out of here pretty soon.
So two things. One, I have a foreign business. I have a corporation from Arizona. So the state charges me a fee for that on an annual basis. And I think to set it up, it was like $50. And then the annual is like $10. So that's not a state level, that's a foreign corporation. And so I missed the emails because they don't do mail. I missed the emails and ended up having to reinstate it. And it was like $60. And then it drops again to $10. So that's on a state foreign entity to give you a sense of their tiered system. My concern about the business license generally is what I've seen in the business community. Those of you on council received a letter from one of our business owners and expressing their concern of me walking into their business without a mask. And as I drilled down on it, because she is a friend of mine, what came out is she's in great anxiety and fear that the government will come and shut her business down because she's not complying with the mask law. So the business owners are being manipulated by this so-called license to comply. And I have a really big problem with that. So as Jim says, sorry, Councilman Paff says, I don't see that happening at a local level. In fact, our county attorney has said that it would be unwise for our city to enforce at a higher level than the county or the state. So anyway, I, in summation, think it should be tiered. It should be no more than $10 a year to renew a license. $50, I don't have a problem with that in terms of setup fees. Thank you.
Thank you. I'm going to make this quick because we're going to get out of here at 10 too, so the planning commission can go. Jason, I've put forth to you the resident, non-resident situation. If you can waste more time on that offline and get back to us.
If really briefly, I think there's a huge distinction there. We're not providing a service, we're providing a precious natural resource in our game and wildlife that belongs to the state of Colorado and its citizens. So I think that's a huge distinction from in-state, out-of-state on fishing and licensing. There might be some other applications, but that one in particular would be my response is we're selling our renewable resource. Hopefully it stays renewable. But it's a precious natural resource that belongs to the state of Colorado and its citizens. By doing so, allowing other states people to come in and take our elk and fish and otherwise, I think that's a huge difference from we're treating everybody the same for a service that the government's providing of tracking this stuff.
Thank you. I appreciate it. We're going to whip quickly to our third item, which is not going to do justice at all. I put out a calendar, a new calendar for council. It talks about September 3rd. We're going to go really into a deep dive into the budget. We've got some things in front of us. I put out a functional list of all the things that were in the spreadsheet. I've also put out 10 big items in the past that have been done by council, and several other things related to the budget discussions. We're gonna go do a deep dive. I want to just quickly mention that I think this business license should go in the budget discussions again, and we'll defer to final decisions on that, and we'll all do some more thinking on it. I appreciate that. Councilmember Neal, you look like you
I
have.
just passed out something to everybody. This is a back of the napkin attempt that was created by Val's input, my input, and Darren's input. It's for, you can use it as toilet paper if you want, but it's got some things to consider as we enter into the budget phase. Trying to come up with a back of the napkin from a little bit broader than just one source. So that's what this is.
It was staff, not just me. I just want our
Okay,
department heads.
Staff put it
Yes.
together. But Val and I also started it off, just so
Yep.
you know, that's what I passed.
And Hillary, thank you.
Thank you to all of you.
I'm going to adjourn the meeting. Thank you. Thank you, everybody.
Help Sally.